It's exactly 11:05 p.m. We can definitely start this meeting again. Happy Women's Day, Empowered Women. Welcome to this amazing webinar that we have set for you today. She breaks barriers, she builds wealth. The Limitless Woman. This is such a powerful topic, and I can't wait for you to see what our trainer, our commercial director, Florence Muchiri, has in store for us today. I know that there are people here who are not members of Octagon and are wondering what we do. So I will do just a brief introduction as to who we are before we start this training. And Octagon Africa Financial Services Limited, established in 2007, is an award-winning leading regional financial services company in Kenya, Uganda, Zambia, and Tanzania. That's why I'm asking Ugandans to represent themselves in the comment section. I see. Guys from Uganda have showed up and are talking to us. Albert Mulele from Uganda, thank you so much. Happy Women's Day. And as I had said, we have branches in Kenya, Uganda, Zambia, and Tanzania. And we have significant industry consolidation within the nonprofit, public, and private sector in 4 strategic divisions, which are pensions administration, trust services, insurance brokerage, we do training, and actuarial consultancy services. So why are we here today? Why have we set this webinar today? This is because of our vision and mission. Our vision is to enrich lives through innovative financial services and solutions. And our mission is to safeguard the financial future of our customers through lifelong learning, risk management, and retirement solution. I know today as a speaker, talks to us about being a limitless woman. She will touch on points cutting across risk management and retirement solutions. And I can't wait to see what she has in store for us. And I'm very glad that you honored our invitation and are here with us today. I realized that have not introduced myself. My name is Elizabeth Wanja. I'm the Brand and Communications Officer here at Octagon Africa. For those who've joined webinars before, I'm sure we've interacted before, and I am glad to see you again for this powerful session lined up ahead of us. So before I even introduce our speaker of the day, I'd like to give you a little information about her so you know who is going to speak to you today. So our speaker today is Florence Muchiri. She is the commercial director at Octagon Africa, and she has a wealth of experience in corporate strategy, sales and marketing, governance and leadership, operational efficiency, and community service. Florence has over 25 years of experience in the banking industry, having worked for Barclays Bank, which is now ABSA, Family Bank, Equity Bank, and Century Microfinance Bank, where she was the CEO. Florence is active in community, serving on boards such as the Kiambu Pamoja Trust Board as the Chairman Finance Committee, the Governing Council of Credit Information Sharing, which is affiliated with the CBK, and many others. She's also a member of the Embu County Development Professional Association as a member of the bonding committee. So I believe she has a lot of insight lined up ahead of us, and I can't wait to see what she has in store for us. And without much further ado, Madam Florence, the floor is yours. Welcome very much.
Thank you, Elizabeth, and a very good morning to you, Elizabeth.
Good morning, Florence.
At least you have then confirmed that I am actually audible, and I wish to wish you a happy International Women's Day, and to everyone else, I wish you all a happy International Women's Day. Welcome to this session, and as you welcome to this session, it's entitled She Breaks Barriers, She Builds Wealth, the Limitless Woman. I appreciate each one of you for joining this morning. I'm cognizant that we do not only have women in this session, we also have men who have joined us I think we need to give the men who have joined us a loud of applause. If you could just go to the emoji and clap for them for attending, because I definitely know that they need to mine knowledge this morning together with us as women. They have wives in their houses, they have sisters, they have siblings, they have colleagues who are women, and therefore, as they have logged in this morning, they intend to actually mine knowledge. Besides that, it will not only be female inclined, as much as the theme today is so much female inclined, simply because today, worldwide, globally, it's the International Women's Day. And therefore, from Octagon Africa, we thought of a theme that will align to what the world globally is celebrating. And that is why we thought of we need to talk about this lady who breaks barriers. We need to talk about this lady who builds wealth. And we need to know who is this lady. So welcome to the session. And I will then go to. Sorry, I'm having a technical challenge. My screen is not moving. Just a minute. There we are. Invest in women, accelerate progress. That is year 2024 for International Women's Day in terms of invest in women and uh, accelerate the progress. So that is what we have as the theme for this year. So you'll allow me to dive into this theme in terms of what we really mean by investing women and how are we going to accelerate women's progress. And that's what we have this today. And I want us to look at who is the limitless woman. Defining the woman, the limitless woman, from where I sit, I thought this limitless woman is one who is unstoppable. She leverages on strength. She leverages on a lot of confidence. She has talent. She is actually focused and a very fearless person. She's time conscious and goal oriented, and she understands her worth. And that's why I'm saying this conversation does not only relate to the women only. However, as much as the theme is women inclined, I believe at one point or another, we all go beyond our limits. We become unstoppable and we leverage on our strengths, our confidence in what we have, and we get focused and we are fearless. The limitless woman is that iron lady. She's a symbol of empowerment and she is a trailblazer. She does not take the back seat. She actually is always at the forefront, pushing the boundaries and ensuring that the boundaries are limitless. And she runs after her dreams and her focus. She attains visibility and has very big dreams. And she ensures that she pursues her dreams. And that is why we talk of her being a focused individual, a focused person. She is a limitless woman. She understands the power of her conversation. Before she speaks, she weighs her words. She knows what to say and where to interject, and at what particular point does she actually interject. She's the kind of a person who has broken the glass ceiling and is very inspiring, and they actually easily connect with other people. She kicks off initiatives and she breaks barriers and she builds then her wealth. How does she do that? We are going to see how she kicks off those initiatives so that she can break down barriers. And I want to highlight a few things of how the Limitless Woman has broken down barriers, and she's a symbol of hope and possibility. When you come across that Limitless Woman, she'll speak with a lot of energy, a lot of gusto, visionary, and she'll give you a lot of hope. If you're seeing a space of impossibility, come across the Limitless Woman, she'll create a lot of hope, she'll motivate you, and the impossibilities will then end up turning into possibilities. In other words, she enables other women carry on with their vision. She enables other women to keep dreaming on, and they don't kill their dreams, they don't kill their visions. She does not only enable people, the women, to keep dreaming, she enables the entire society, including the boy child. She will empower the boy child. She will motivate that boy child. And therefore, as we are talking about the International Women's Day and saying we are investing in women, why are we investing in that woman? Why do we want her to be a limitless woman? It's purely because we want to accelerate progress in community, not just progress regarding the woman, but progress regarding the community. And that's why she's a symbol of hope and possibility, because she actually accelerates wealth.
Florence, your mic is muted.
Sorry about that, Elizabeth. I hope I'm back. I can be heard.
Yes, yes, we can hear you now.
Okay. How does the limitless woman therefore then empower? She breaks barriers. We have seen women in male-dominated spaces, like, for example, sports. For the longest time, some of sporting activities like football have been male dominated. And in the recent contemporary society, we have seen the limitless woman engage in interesting sports that have been male dominated. They have taken leadership roles to the level and to the degree that some of them have gotten to the C-suite level, where we have CEOs, we have CEOs, we have people sitting in boards, women sitting in boards as directors. We have women who are engineers. We have women who have been in the construction space. Before, this was such a male-dominated environment. Today, the story is definitely very different. You'll find women in the construction space very busy, either working in the space as engineers or as constructors, or actually doing the manual work themselves. So it has the woman has broken that barrier and gotten into that space and said, hey, you know what? This is also my space. We have seen women in the transport industry. The first time I saw a woman in the transport industry, and for this, I want to specifically mean the public service vehicles, I was so mesmerized. I really looked at that lady as I stood at the stage, and I was wondering, how do you board and quickly jump and behave like a matatu tout? Matatu tout, because I know I have Ugandans on board. Locally here, our public service vehicles, we call them matatus. So those who collect the bus fare, they are commonly known as matatu tout, or makanga is the local name known here. And as I stood at the stage, I was like, wow, what courage. I asked myself, can I do this? And I found it to be a very challenging space. But you know what? That first one that I saw, today the story is very different. There are many more who not only are they matatu makangas, they are actually others who are drivers. We've even seen some who have engaged even in the heavy duty vehicles, as drivers. And therefore, it's a space that the woman has decided, I am breaking this barrier. In the business world, we have seen also women get into that space. Previously, it was a space that was well managed by men. But today, we have seen women get into that space, and therefore they have broken barriers. These are just but a few examples that I actually chose to pick upon by asking myself, where have these women broken barriers and what are they doing differently? And I was able to cite just a few in the male-dominated space. Allow me to give you some figures that I got actually from the internet. I was wondering, how many CEOs do we have in the world? And I noted that Thailand has the highest proportion of female CEOs in the world. They actually range at 30% in Thailand. The 30% of the CEOs in Thailand are women dominated. We haven't gotten there in Africa. And specifically, Kenya, my motherland, we haven't gotten there. In East Africa, we still haven't gotten there. Next to Thailand, we have the Republic of China. China are closely following Thailand. Maybe they'll get there soon, but they are at 19% and 11% difference. Let's think about the developed countries, and we pick on the European Union. European Union, their figure, interesting enough, is 9%. And these are countries that got developed way, way long ago. The US, United States, it's at 5%. And these are statistics that were taken 2022. And therefore, we are not talking of too long ago. We are talking about a year ago. These are statistics about people in the top positions. Last year, on 4th of January, the Standard Media covered something very interesting. It brought to us the space of 25 most influential CEOs in Kenya. And when it brought to us these 25 CEOs in Kenya, we were able to actually note that 14 of them were women out of 25. That is an interesting statistics because we are talking about almost 50-50% gender parity. When you look at the women in boards also, we also have a 50-50% gender parity in boards. This is a very different story. Growing up, there were less women in that particular space. Now they are more, meaning the women have started breaking this barrier and have started occupying those spaces. And as they do that, they are doing that through different things. It is the woman who has diversified and has a lot of inclusion, because remember, this is the person who beyond office, they have several other things that they do. So, International Women's Day 2024, it's talking to us and it's telling us about the economy has a female face. When I saw this, I was very, very excited. A lady I am, I said, wow, I've never thought of this. The economy having a female face. Can you think that together with me? And if you're here and you're a lady, ask yourself, I, as a lady, what part do I take in the economy? That's why we are talking about investing in women and accelerating progress. So what part do I play and where exactly am I? That's an interesting question that I would want each one of us to ask ourselves. And I have a quote there. And the quote that I have there is a quote that I have where somebody was talking about her story. And as she was talking about her story, that's Laura. Laura spoke about her story and said something very, very interesting. She said, in terms of investment, and this is a point I want each one of us to actually understand. As we are investing, whether you're a lady and whether you're a gentleman this morning, there must be growth in an organic manner. And when there is growth in an organic manner, when we're talking about investments, the ripple effect is huge. You must undertake what we call baby steps in investment. We must not rush to it. It's not an exercise that we can go running for it. We must take baby steps and be very, very patient. And as you're being patient, you're building your wealth. Remember, our title is She Breaks Barriers, She Builds Wealth. So as you take those baby steps and you're being very patient, you are slowly building your wealth. You are slowly building upon one block upon another, one investment block upon another investment block. And you do that, you exhibit your capability, and you realize that you have so much more. If today you put 10,000, then next month you put another 10,000. By the end of 1 year, you will realize that you have 120,000. You will realize that you have more capability. But if you are told remove the 120,000 at a go, that might be a challenge. But if you take the baby steps, step by step, you realize that you have allowed yourself to actually invest. Allow yourself to also have a support system. And we're going to see how the support system adds value in terms of investment. We're going to look at social investments. So allow yourself to have a support system, be with the right people, be with the right team if you really have to grow. This is a journey that you must internalize and ask yourself, as I invest in myself, as I accelerate progress for myself as a gentleman, for myself as a woman, am I allowing myself to have the right support system? If you can see yourself in the next new level, you must be very patient in the process. There is a saying that Rome wasn't built in a day. Therefore, this is not an overnight process. And what I would say is that we must take time, ensure that we accelerate our growth step by step. And therefore, we are going to look about the economy having a female face. Again, these are things that I was able to actually check, and I realized I want to talk about what is important about International Women's Day as I wrap up that part so that we can go to the space of investment. One, a co-tenant of this year's International Women's Day is about, implementing gender. That is why we are talking about responding in terms of the finance side of it. When they began the International Women's Day, it was about gender equality, gender parity, fighting for the women's right. But over the years, that has been changed, that has been moderated because times have really changed. When they were fighting for the women right then, things were very different. Today, the world has evolved. Today, things have actually really changed. And therefore, we may not really want to talk much about fighting for the women right today because things are different today. And we want to consider, as much as we are remembering the International Women's Day and fighting for women's rights and gender parity, we are also thinking about the economy having a female face. And this economy having a female face, the female has not managed to have this economy alone. It is because the opposite gender has given the female that particular space to occupy. The opposite gender is willing and has become responsive to co-work with a woman and be able to build the economy together. And therefore, as the woman is breaking barriers, the woman has not broken barriers alone. The woman has broken barriers and is building wealth because the opposite gender has given them that opportunity. So it's a responsive financing. And therefore, the economic strategy that we want to consider is that we must analyze the different needs every person has. Whether a man or a woman, we all have different needs. And we must also look at our historical underinvestments as individuals, as a country, as a community, and ensure that there is a fair distribution of the resources. Talking about women, women often bear the brunt of caregiving, and I do not want to dive into that. I know when I talk about caretaking, we have so many ideas about how women do the caretaking. Again, women are the one who budget in terms of their duties in household. They are the same one who have faced increased pressure on the care system. But the world has realized that in the midst of all these crises that the female face, they also need to also have different faces. So we are talking about the women having an economic face. Still, when we talk about climate change, you will find the face of a woman. When we talk about any conflicts, you'll find the face of a woman. And you can think of so many other things that we can address that can have crisis. And therefore, we must then ask ourselves, how do we build this woman? How do we invest in this woman and provide financial literacy to this woman and be able to talk about wealth this morning? Somebody said that the more you earn, the wealthier you become. And I always ask myself, is this statement true or is it false? The more you earn, the wealthier you become. I tend to think that it has some element of truth, but I also tend to think it has some false information. Because even if I have worked for 20 years and have not been saving, then I can't be wealthier. So it must then have an element of some false information, but it also has an element of truth. Because the more I earn, the more probably I grow in terms of increment, salary increment, maybe through career growth, career progression, promotions. If not career growth, I have diversified and I have a side hustle that is earning me some income, some revenue, and therefore I am slowly building up my wealth. So wealth is a function of saving, not a function of earning. And that is why I have put that in capital letters, savings and not earnings. If you do not save, even if you earn more and more, you will remain poor. You must save. So it's not a function of earnings. You have seen people who have earned 300,000, 500,000 Kenya shilling, and for the sake of Ugandans, I can even give a figure like 10,000 US dollars. But when you look around their life and what they have in terms of investments, they have nothing. Simply because they have lived their lives earning and therefore spending all that they have and are not having any element of saving. So being wealthy is having some substantial assets, and to get those substantial assets, you must save. And you must have resources beyond money, not just having money, liquid cash. You must have other assets beyond money. And that time, then you can say that I have built my wealth. If you don't have other assets, you just have cash, then it's something that you need to ask yourself, have you built your wealth? What if that cash then disappeared? What if that something happened to that cash? What's your fallback? And therefore, you must also have other resources. So you must have substantial assets, you must have financial resources, you must have the actual cash to be able then to talk that you actually have some level of wealth. So let's move on and be able to look into financial investment. Allow me to begin with what we call pooled funds. And I don't want to lose you here. If you're here together with me, let's journey together about the financial investment. because we are talking about investing in women and accelerating progress. And we need to accelerate this progress together, both genders. So pooled funds, you find that these are funds that we would be talking about, something like guaranteed funds or segregated funds. At Octagon Africa, we actually do have an interface with guaranteed funds or segregated funds indirectly. You'll find this is a component that you mainly find within the insurance companies, especially the guaranteed funds. This is where you have been guaranteed some level of income. And when you've been guaranteed some level of income in terms of your return on investments, for example, you can place some amount of money with the insurance, a particular fund with an insurance company, and they tell you, we'll put it in the guarantee funds. Currently, guaranteed funds range between, let's say, a 4% or a 5%. And they guarantee you, we are going to keep this money for a whole 1 year. And after 1 year, we will give you back your capital money that you have invested with us, your fund, but this fund will have grown, and we'll have grown it by this particular percent. We assure you that it must meet 4% bare minimum. That means even if the year is very, very hard and tough, the insurance company must pay you back your original fund and a bare minimum of 4%. If the year was good and they have made returns in that investment, then they would give you a better return, not just a 4%. So if they declare, let's say, a double digit, like a 10%, that is what they will give you as a return on investment. But remember, like I said, if the year is terribly bad, then they must guarantee you a minimum of 4%. So even if the year that year was so bad, like we find that we have motions of very tough years, like COVID was a very bad year. In Kenya, the political year, the campaign year, or rather the election year, normally the economy again gets a little bit destabilized. Let me go to the COVID year. In the COVID year, let's assume that it was a single digit and probably at a 3 or a 2%, and the insurance had guaranteed 4%. They will not tell you that it was a COVID year and therefore it is a 2%. They guaranteed you, and therefore they must give you the bare minimum guarantee that they offered, and that means they will give you the 4%. So in terms of the guaranteed funds, at least you have a guarantee in terms of your return on investment. Unlike segregated funds, for segregated funds, it's an open fund. And as when we are talking about open fund, is that the fund gets invested in different asset classes or in different portfolios. And when it gets invested in different portfolios, it gains the revenue, it generates revenue, and that's what you're given as your return on investments. And therefore, on segregated, it is open, meaning if that year they don't make much money, then you suffer the penalty of then having a low investment. And like when it is guaranteed, you are guaranteed. When it's segregated, when they make a lot of money, then you enjoy the premiums of having that the year was good, and therefore you enjoy that bit. At Octagon Africa, under our pension schemes, which I want to talk about just a little bit to give an example. If you are an individual working as a private entrepreneur, or possibly you are working under a particular business that does not have pensions, you do not need to feel that you don't have a pension scheme. We have something to offer you. I've written there IPP. IPP basically means individual pension plan. You can jump on board and have an individual pension plan. And when you have this individual pension plan, then you can be able to start saving to safeguard. If you can remember Elizabeth, as she was introducing, she said one of our missions is to safeguard your future. You can be able to safeguard your future, and especially after when you don't have the strength and the capability that you could be having right now. At the time when you be 50 years and above or 60 years and above, when your strength is gone and you require money, then you can safeguard your future using the individual pension plan. And it's very, very simple. You can connect with us. You can send the word pension via SMS to 24123. Pension, an SMS to 24123. And as Octagon Africa, we shall respond to that SMS and we shall guide you accordingly to how we can onboard you on an individual pension plan. There are others who are on employment, and as they are on employment, your employer could be having a pension scheme for you. And therefore, it could be under what we commonly call umbrella pension. Umbrella pension is where there are pool of multiple employers together. And therefore, you are contributing either as an individual, and maybe your employer is not matching. That is still in order. Continue contributing, and you can even add more in terms of what we call additional voluntary contribution, an AVC, and add more into your pension scheme so that you can safeguard your future. If you are in a contribution where your employer also contributes, it can equally also fall under the umbrella concept or under what we call the standalone occupational schemes. Either it's an occupational scheme or it's a standalone where your employer is having self-administration over that pension scheme. What I need to mention here deeply is that it's important to ensure that you save and save adequately. Do not give just a few coins. And that's where the government of the day came in and spoke about NSSF and said 200 shillings NSSF. When you work for a period of 20 years, how much money do you save? 72,000. Add any return on investments, having had that money probably built up over time. How much will it come to? Maybe 100,000 or 120. When it gets taxed, how much do you go home with? Very little money. Although at that particular level, it will not be taxed because pensions also come along with a tax benefit. So such amounts may not be affected in terms of tax. So you may end up going with about 100,000 by just contributing 200 shillings and you have worked for 20 years. And that is where the government of the day has changed in terms of the NSSF, and the contribution now has a tier 1 component and a tier 2 component, and the tier 2 component has higher income, and it is actually a pension. Talk to us. We'll let you know more in terms of financial investments where pensions are concerned. Allow me to go into the fixed income. In terms of fixed income, we have the fixed deposits and the call deposits. These ones you'll find in the bank. So talk to your bank or any bank that's offering fixed deposits. All banks do offer deposits, but it's important to also ensure that it's a stable bank. And we do have banks, tier 1, tier 2, tier 3 banks. Ensure it's a stable bank even as you negotiate on that fixed deposit. Call deposit is where you deposit money with the bank and they give you a rate. The call deposit rate is usually low. I know currently it's around 3 or 4% thereabout. But the beauty about a call deposit is should you require your money, walk into the bank, they'll give you your money instantly and they'll also give you the interest coupled together. You will not lose the interest. But on fixed deposit, you fix either for 1 month, 3 months, 6 months, or 1 year. So should you have fixed for 1 month and 3 weeks down the road, you have a need and you go for the money, you lose that interest because you've broken the deposit before its expiry term. That's the disadvantage when it is a fixed deposit. But fixed deposits have better interest rates, definitely, and it also depends on the amount. So different amounts attract different interest rates. Then we have the debt instruments, and on debt instruments is where you are loaning money either to the government or to a private institution, like an organization, like the corporate world. And when you're loaning money to the government, we are either talking of a treasury bill or a treasury bond. On treasury bills is short term, and it is usually floated for 91 days or 182 days or 364 days. Therefore, it is maximum 1 year. It's short term and it is at a discounted interest. However, it gets redeemed at par. Let me break it down. What do we really mean? Because the financial space, at times we use a lot of jargon. When we talk that it's discounted, if, for example, you are going to give 1 million to Kenya government, and they have given that 1 million at a 10% interest rate, what then happens is that as you are forwarding the money to the government, you will forward 900,000. It's discounted. But when the government will be paying you back for the return on your investments, the government will pay you back 1 million. That's why we talk of it being redeemed at par. So it's discounted at interest, 900,000. Then when you're receiving it back, you get it at 1 million. So it is redeemed at the figure of 1 million, the figure you wanted to loan it to the government as a debt instrument. On the treasury bonds, they are long term. They can go for 5 years, 25 years, 40 years. And the essence of either the treasury bill or the treasury bonds are different government needs. For example, infrastructure is one of them, and several other reasons why the government will borrow. For the organization, a corporate entity, a company like, for example, Safaricom, would be talking about a commercial paper. A commercial paper is something close to a treasury bill. It's short term, maximum 1 year. When we are talking about corporate organizations going long term, we talk about either a commercial bond or something called as debenture. Commercial bond, debenture, it is one and the same thing. And these are issued again by corporate organizations. Something to caution on corporate organizations when you're going for a commercial paper or a commercial bond is that ensure that that corporate entity is registered under the NSE and Capital Markets Authority to be able to be regulated and to ensure that your funds are also equally safe. Just the way I cautioned on the deposits, that it's important to be sure about the bank. When we talk about equities, this is nothing else but shares in the stock exchange where you buy shares, and shares are either listed or unlisted. The ones that are listed, they are listed in the stock market under NSE, and we normally see that daily in our papers, and it's an open market that you can actually go and transact and be able to save. Those that are unlisted, it's also important to take caution and weigh what company are we dealing with. When we talk of offshore investments will cover all those things that I've spoken about. It will cover the pooled funds, it will cover the fixed income, it will cover the equities, only that it's outside your area of jurisdiction. It's outside Uganda. It is outside Kenya. But basically, it entails all those things that we were actually talking about. And therefore, let's talk about social capital investment. And under social capital investments, you must invest your time wisely, and you must choose how you invest your time. Remember, we are talking about investing in women and accelerating progress. So for you to accelerate your own personal growth and for you to break your barrier and build wealth, it's important that you make a wise selection about your social capital. Your social capital can either build you or break you. Your social capital can either tell you, let's go and invest, or your social capital can tell you, let's go and squander. Let's go and dream big. Let's go on holiday. And when you do that, if you have not built up your resources separately, taking care of that holiday, you start denting on what you have saved. You start depleting your savings. So it's important that we take care of our social capital. So this day, as we are celebrating the International Women's Day, we would want to really tell our sister ladies, let us take caution about our social capital. It can either build us or break us. In terms of our social capital, there are those who will fund a talent that they see within you. And there are those ones who will see that talent and they may probably be jealous or, for lack of a better word, may not want to grow it and develop it and may trample over it. So it's important that you identify your social capital so that as you are accelerating your progress, you must take care of that aspect. In my organization, we as a financial institution, we are cognizant that social capital is very, very important. For that reason, we have ensured that we actually offer financial wellness clinics like we are doing this morning. These are financial wellness clinic that we are offering, and we offer these clinics for free. Give us 1 hour and we'll do the financial wellness clinics. So if you have a group chama, ladies who are here in the house, you have a group chama, please call us. Men here, you have a men's group that you have, call us. We'll come and offer 1 hour financial wellness and we'll talk about investments so that we create this awareness where we must really invest financially and in other spectrums. Other than the financial wellness clinics that we have, we also offer an advisory role in terms of investment management. We have a department known as asset management that actually plays that critical role in terms of advising where do you need to invest and what do you need to do. As we do that, I want to touch on one product that I thought really is a social capital from our end and is some product that you really need. Are you in a WhatsApp group? And while you're seated at the comfort of your sitting room and just seeing the chats in the evening, a group gets created. And as you get into that group, people are asking questions. What is this group all about? What is it about? And, people are asking 1,001 questions. If not that, you are in your office. And while you're busy working, you take a break. It's lunchtime. You take a break. Then you get into your social media platform and you find Mr. XYZ funeral arrangement, and you have been added into that WhatsApp group. We do have a solution for the community, a product known as Last Expense. And it's a product that we have with the ABSA group of insurance company under the umbrella of ABSA. I know we know ABSA from a banking perspective, but under that last expense, you can join and you can be a principal contributor. And when you become the principal contributor, your spouse will also benefit. And other than your spouse, will also take care of your parents, both sides. That's your immediate parents, your mother and father, and your in-law parents, mother and father. Then under the same cover, will also take care of 4 children under the last expense. So we are talking about covering 10 people under that last expense. It is a friendly product. Talk to us one more time. We can be able to give you more about this product and the premiums. But just to give an example so that you don't wonder, is it very expensive? It's very, very affordable because with a figure of about less than 2,000, you can actually purchase a premium. And when you purchase a premium, the premium that you'd be purchasing would be a cover that can cover your family to the tune of about 100,000. So the mchango groups that we get into, we need to let them know that there is the last expense so that when we have these scenarios where our loved ones go, and when they go, they don't give us a notice. They don't tell us, by the way, on the 13th of April, it is the day I am going to die, and this is the money I have saved. And I also want you people to come and add this much money. Death is a notice that we don't carry along with us. It comes and we are gone. And our loved ones have to come in. Let us be the people who will accelerate progress in our community, accelerate progress at our working environments, accelerate progress by letting people know that they can invest in this social capital and ensure they have a last expense cover that takes care of you when you are gone. It ranges from as minimal as 50,000 Kenya shillings, all the way, that's in terms of what you can be paid, all the way to 500,000, 500,000. So for 500,000, the figure would definitely be different, but that's it. That's what we have. That's what we're offering you this morning under the social capital, so that those WhatsApp groups that are created, at times they come when we are totally flat-footed, we don't have much money, and we are feeling, I wish I had money, I would have contributed better. And you end up contributing 500, you end up contributing 1,000 shillings, and you're feeling this is not what I would really have wanted. We do have a solution to offer. We have the Young Money Club, and the Young Money Club is something that we introduced as an octagon, and it is purely to be able to ensure that what you are not told growing up, that you need to save, that you need to budget, that you need to be a proper financial manager, we are telling the generation that's rallying behind us. And therefore, we are dealing with the young children, the teenagers, the young adults, those who are in school are the ones who are in our Young Money Club. Therefore, if you have your child, let them know this holiday, Young Money Club, we will be there. We connect virtually, and we have children who are now connecting within the African continent for our Young Money Club. And we do lessons for them, and they ask questions, and we teach them, and we want to believe that they'll be better money managers tomorrow. Let's talk about health investment, because my time is almost up. Let's ensure that you cruise through life when you are investing in terms of your health. It's important that as we are accelerating progress, we are healthy. How do you do that? Ensure you go for health checkups at least annually. I know that's something we know, and we are reminding you because we need to invest in our health. Exercise, ensure you have a medical cover, and definitely you must observe diet. These are just the bare basics that I'm touching on. I may not be a health expert. The health experts may probably tell us more, but I'm not a health expert on that. But however, I want to talk about the medical cover that I'm talking about. I've just said up there. We do have a medical cover that covers ages 18 to 75 years. So if your parents are still alive, please talk to me. We'll place them on this cover. They do not need to ail, and as a family, you are contributing money. It's a pain point, or a pain point to be a sole caregiver or caregiving as a family, because your 70-year-old parent is not undercover. I have a medical cover that I can offer you, and it has no waiting period for maternity. For those who are still young and at that age, it has no waiting period for maternity. And it offers, of course, both men and women the opportunity to maintain your status and to go to decent hospitals. We have an array of hospitals under this. We still also can advise about a post-retirement medical cover. These are for those who are about to retire. Do not drop your status. Right now, if you're working and you fell ill, you could walk into Aga Khan, you could walk into Nairobi Hospital, Avenue Hospital, a private hospital. We do not want you to retire. And when you retire, you start looking for Kenyatta University Hospital or a public hospital, for that matter, trying to look for medical attention. We want you to maintain your status. And therefore, there is something known as post-retirement medical fund. As you retire, you can put a portion of your retirement fund into this medical cover. And when you put that, that's where the premiums come from. And as the premiums come from there on an yearly basis, then you can continue enjoying the same status, the same hospitals that you were attending to. And it's a very important thing. If the medical fund gets depleted, This is where the family members can come in and continue paying the premiums. And so long as the premiums are paid on an annual basis and you don't drop the ball, then you will enjoy having a medical cover till you die. So if you met your maker at the age of 99 years, you will still be enjoying this post-retirement medical cover. Talk to us, we'll let you know about this. And it's a very important cover. Something I forgot to actually talk about when I was talking about this cover between 18 to 75 years. For you as a principal and as a spouse, the entry age of paying for this is you will go up to 80 years. And so long as you attain 80 years, you are continuing to pay for this cover, then until you meet your maker, you are well covered. For the parents-in-law is up to 90 years. And for them, their ages range between 30 to 90 years. And so long as even when you get to 90 years, the premium is being paid, then you continue enjoying the cover. For children, we are talking about children from 2 weeks all the way up to 21 years or even 25 years. But if we are going to go to that 25 years, the child must be schooling, and definitely documentary evidence is required. We do not have an exit age on this, so long as the covers are actually being renewed. And last but not least, we are going to look about real estate investment, and among others. We may not exhaust the investments aspect today, but on real estate, I want to talk about two things. I do not want to talk about what my community, and allow me to say this in Greek, they say, "Proti maguta maguta." Mean, for the sake of those who do not come from my community, these are where you go and buy just, a small portion of a plot. You buy another small portion of a plot and keep another small portion of a plot and keep. At the end of the day, you have too many other small plots here and there, fragmented. They are all not in the same place. That's not what I want to talk about. I want to talk about real estate investment, something commonly known as REITs. And this is global, so these are sure. I know it's also affecting Tanzania, Uganda, and every other place that we are at. In REITs, real estate investment trusts, we have two models of real estate investment trusts. One is what we call an income REIT. And in an income REIT, this is where you acquire property purely to generate income, purely for equity, purely to receive income, like a rental income, for example. And I want to give a local example that we have here in Kenya. And the local example that we have here in Kenya is what we call a Kwetu model. This is under a company known as the Akon Student Accommodation Income REIT. The Akon have built so many hostels, and these hostels are mainly for the student hostels. And it's where, if you then give your property for the student hostels to then be done, then it adds value to you in terms of rental. And there's the arrangements and the agreements that you will do definitely with Akon. So they are purchased and completed purely for income. Then under the development REIT, or what we call the mortgage REIT, is where then you are investing so that you can then construct for disposal. It's for development. So you construct, then you dispose. Akon again are still in that space, and that's how come in the Kwetu and the Kwajani student hostels, they have actually developed and disposed them for income purposes. So they can dispose the whole flat, they can dispose the flats in terms of one house I buy, and another one somebody else buys. At the end of the day, the whole flat has different owners, but the different owners are enjoying in terms of the rental income, which actually gets also invested through the real estate investment trust, which is under the Nairobi Nairobi Stock Exchange here in Kenya. And any REITs in any other country, it's actually also under the regulator of the stock exchange in that respective country. Then I also wanted to talk about alternative investments as I'm touching about any other investments. I may not exhaust this topic like I have said, but on alternative investments is where we have private equity. You could be having a large piece of property, for example, up country, and within your locality, there's some economic some economy that gets driven in that community, and you can identify with that economic activity. And as you identify, you can see either the farmers or whatever is being produced in that community, they are not getting proper returns for it, and they are actually disposing their produce or their products at a throwaway price simply because the middleman comes in and buys them very cheaply to go and dispose and further sell to somebody else. And then they are the ones who are benefiting on the profit, but the producer is not taking the profit. And possibly you could be having a piece of land and you are thinking, how can I add value to these farmers? Or how can I add value to these people who are producing this by maybe putting up a factory for them and creating the market? Then you can look for that private equity and get into what we call a joint venture, into a venture capital. And when you get into a joint venture capital, then they come in, they assess the place, they actually do after they've done the assessment and a feasibility study, and they are convinced about your proposal, then you get into a joint venture capital, and they can put up the factory, they can offer them the market, and all those are logistics that you definitely create and discuss during a joint venture capital. So those are alternative investments that we also have, and that can accelerate your growth. It can accelerate your growth as a man and as a woman. And therefore, with that, I think I have I've spoken on different kinds of investments. I've spoken about the financial investments. I've spoken about the social capital investments. I have tackled about the health investments, and we've tackled about the real estate investments, among other investments. And therefore, I hope that I have reached out to you. I have added value to you today, and you're going to think, how am I going to build wealth? How am I going to break the barriers that surround me and build my wealth and be limitless? Thank you very much for listening to me this morning. Over to you, Elizabeth. I am done.
Thank you. Thank you so much, Florence, for that wonderful and insightful presentation. Personally, I feel inspired, informed, and empowered by what you have taught us today. And thank you for making this in sorry, what is the day today? Women's Day, catalyst for breaking barriers, building wealth, and celebrating the limitless woman within each and every one of us. And with that, I'd like to open the question and answer session. So, ladies and gentlemen, feel free to type in your questions in the chat section. You can also raise your hand so that we can hear you this wonderful day. Also, share your comments and your experiences in the chat section so that we can engage. Yes. So I go to the chat section and I see Anne Wamboish is saying, "Would you share the recording for those to those?" Okay, yes, definitely, Anne will share a link to the recording. So we have a question: where can we get more information on rate?
Thank you. Where we can get more information on REITs, when you get to Google, actually, you'll be able to see REITs, and there's the organization that actually handles REITs itself, and also the Nairobi Stock Exchange. You can also get help and support on REITs because that's the front office space about it in conjunction with Capital Markets Authority. Thank you.
Thank you, Florence. We have Delvin who's saying, "Thank you so much for the insightful presentation, Madam Florence." And then we have Irene. She says, "Thank you for the presentation. She needs more information and contact on the post-retirement medical fund, I will be able to type in our insurance email where we'll reach out to you, and we'll also be able to share the brochure on the product. Florence, if you'd like to comment on this.
Yes, I want to probably thank you, Irene, for that question. I do not know whether, Irene, you do have an existing scheme, and I will first address it from the point of an existing scheme. For those who have an existing pension where you are contributing as an individual, and maybe your employer is also contributing for you as an individual, you can also then contribute towards your post-retirement medical cover as well, such that as you are contributing for your pension, you have a separate kitty where you are also contributing on the post-retirement medical fund. That is a fund that has been approved by the Retirement Benefit Authority. And therefore, when you put funds towards the post-retirement medical fund, by the time you attain retirement age, the match that you'll have built over in that fund is what now will get to an insurance organization. And what we normally do is we get quotes for you from different insurance companies, like 4 or 5 insurance companies, and we go for the insurance that will offer the best quote. And we, of course, we'll also look at what are the benefits as well that they are offering. So when you go for that insurance company, that's where now we transfer the fund, the post-retirement fund that you have been saving over the years, to that insurance company. And as like I said earlier, that is a fund that you can keep building, because as the years go by and the insurance company is getting the annual premium from that fund, the fund definitely is also getting depleted. So it's something that needs to be revamped on an annual basis, so that if you put bit by bit, it will add value. If you wait for it until it depletes, then make sure that you have a model where on an annual basis you can still afford to pay for those premiums, so that you don't drop the ball on that. Or then you have probably your children pay for you for that premium, though it's something that we don't advise. We would want you to be financially independent till you are 99 plus years. But all those are support systems that, again, we do go for as Africans. So that's, I think, the addition that I would make about the post-retirement medical fund. And if you have not saved enough fund by the time you are retiring, and possibly from your pension, you feel that it has some money that you'd still want to add to the fund, that is still also allowed. If you didn't have then a separate one, and you want to touch on your pension money to put that as part of that money aside for the fund, that you can still do, because under the Retirement Benefit Authority, that fund is a good fund for anybody retiring. If you do not have a scheme, because now I've begun with those who have a pension scheme, if you don't have a scheme, let's say you are the one now, the IPP, Individual Pension Plan, yes, you can also enjoy the post-retirement medical fund by creating that fund alone and letting us know that this is for the fund and I want it put separately. So that is what we have on the post-retirement medical fund. Thank you, Irene.
Thank you, Florence, for that. We have a message from Dr. Edward Kobuthi. He says, excellent presentation, deep financial insights, great. And then Lynette Agola asks us to share the last expense rates. I don't know if you have if you have the time to take us through the brochure on the last expense.
You could be reading another question as I get to, I'm sure I have it somewhere.
Yes.
Yes, please. If you could be, and as I open the presentation.
No problem. Dr. Edward Kobuthi again says, give us the Octagon contact and who we can reach for further discussion. I have replied to you. The email is training@octagonafrica.com. Then we have Helen, who says, thanks for the deep financial insight and well explained presentation. Thank you so much, Helen, for your feedback. Thank you. And then we have Leah, who says, thank you very much for this enlightening talk. Please share the recordings, and happy Women's Day. Happy Women's Day to
Do you
you,
think I don't?
Leah. We will reach out to you after this training with the recording and the brochures for all the products that we have talked about today. Judith, you say give us your telephone contact. So, Judy, our number is 0709 986 000. I will be able to reply to you on the comment section so that you can save it and also give us a call. Irene, you say well clarified. Thank you so much. And then we have Stella who says, thanks for the presentation, Miss Florence. Does Octagon provide REIT services, or is it partnering with any service provider in real estate investment in Uganda? I would like to know more about the real estate investment option.
Thank you, Elizabeth, for the comments. And for my Uganda counterpart, I would need to find out from our office in Octagon, Uganda, the companies that they can refer you over to. Please share with us your contact so that then we can be able to link you up with our Uganda office so that then your query can be resolved where that is concerned. But definitely, I know there are REITs in Uganda so that then you can be able to be sorted out from that particular front. There's someone who asked about if I could share the last expense premiums and how they look like. And like I explained, there's the principal member, then there's your spouse, then the parents and parents-in-law, and then the children. So we are talking about 10 members. So under option 1, when we go for 50,000, we have 1,700. That is what you would pay as a premium the whole year. And that means that if you then have members within your family that actually then pass on it within that year under the people who are in the cover, then we are able to get in touch with the insurance company. That we do immediately. So notify us immediately, realize that money for burial is required instantly, and the insurance company is able to quickly work and disburse the money in good record time, because we appreciate and understand that it needs to be expensed in good time to meet the funeral expenses. We have had cases and it has been disbursed within a day or two, and therefore no cause of worry or alarm where that is concerned. Option 2, under the 100,000, the premium is 3,200. Option 3, 150,000, we are talking about 4,700. Option 4 is 5,800. Then for 300,000, you would be paying 8,500. For 400,000 is 11,000. And for 500, I know it's 12,500. However, should you want to have additional premiums beyond the 10, and you want to put a member, the numbers indicated there are the additional figures that you would pay. Allow me to give the example with the one under the 50,000 category. If it is a child, you will now add 250. So you'd pay 1,950. That's what you would actually pay. If you are adding somebody ages between 21 to 50, you'd be adding 300 shillings. So would get to 2,000, so that you have your 10 members plus this one more extra person. If you are adding parents and parents-in-law ages 81 to 90 years, then the premium would slightly change. We are talking about 1,300, which you add at that particular point. And also the principal member, the age. So you realize that again, there's a tweak where the age again matters. If the age is rather on the higher side, the premium will go slightly up just a little bit by those particular figures. So that is what we do actually have. And however, and either way, it's still a very friendly amount, because, for example, if I would go to the one for 500,000, for example, if I am adding, my parents are between the ages of 81 to 90, and therefore I am adding this 4,200, and we appreciate it because their chances of their expiry is so high at that particular age. Then it would mean I would be paying a figure of about 16,000, but that 16,000, I would be getting, how much would I be getting? I'd be getting 500,000. That 16,000 that I might see like it is too much right now, in the hour of need, I would be so relieved. Should I be getting to the insurance company to tell them I have lost a loved one, my parent-in-law has died, and I'm making a claim against the 16,000. I had a client the other day who told me they lost their parent during COVID, and they had this last expense. They had a last expense, and he was just giving me a sweet experience. The way he actually called, remember during COVID, you are not going places. So he actually called, and he was told to fill in and forward the information, which he forwarded through the WhatsApp. It was received, and actually funds were disbursed. 2 weeks down the road, the mother now passed. The first one was the father. The mother passed. Again, COVID. Again, he made the claim and was actually paid. For him, he had 100,000. So he was telling me that 100,000 sorted them out real time during COVID, when people were not even going places to even changa money. It was such a challenge, and everybody was nursing their relatives, and people are doing fundraisings in home sales because we were all affected. So he had a beautiful story to tell me, and I was very excited, and I said, I am happy that this last expense sorted you out in the hour of need. Sad that he lost both their parents with COVID, but he had a smile to do because of the last expense.
Thank you. Thank you so much, Florence, for that. We have a question from Tina on the post-retirement medical cover. She's asking what happens to parents who are 90 plus years?
Parents who are under 90 plus years, they may not now fall in the post-retirement medical cover, because remember, post-retirement, you actually now take it before you retire, as you attain age 60, and now you are formally retiring. Or if you go for early retirement, which is 50 years, you are now retiring. That's when now you make arrangements for that post-retirement medical cover. So at the age of 90, this parent at 90 may not actually benefit on that. And sadly, still, they may not get into the bracket of the cover that I said, our cover, because remember again, our medical cover, I spoke about the upward entry bracket as 75 years. So at 90 years, then that is the caregiving that majority of the Generation X have gone through. And that's what now you would need to go through, but educate another. If they are not 75 years yet, there is a cover for them.
Thank you, Florence. I hope that Lydia, because you also asked about the medical cover for parents. I hope that that answered your question as well. And for those with queries on individual products, I know that you signed up with your contact information. So even before you write to us, we'll be able to reach out to you, call you, and get to know about what you need and be able to help you through your queries. So Judy says, thank you very much for the information. Excellent presentation, Helen. You request the recordings to be shared via email. We will do exactly that after this. By the end of the day, you'll have a link on the recording. So Leah says, I missed a bit on individual medical cover. In case I would like to do an individual medical cover, how do we go about it?
talk to us. And I know Elizabeth will share her contact so that then we can onboard you on the individual medical cover. And the fact that you missed a bit on that medical cover, allow me just to quickly go over it and say that we have a medical cover where we have the entry age between 18 years and 75 years. And in that entry age on that particular medical cover, we also said that as you are on cover, we do not require a waiting period for anybody who is for maternity. We don't require a waiting period on that. And we also spoke about that medical cover and actually said that it offers you continuity in terms of hospitals, a wide range of hospitals, and therefore you may not be limited, the public and the private hospitals, all of them together. And I think what is the key benefit is the upward bracket in terms of the entry age at the age of 75 years. Maybe what I forgot to actually mention at this particular point is that when we are talking about an entry age of above 60 years, to be very honest, between 60 and 75 years, that's the age where majority of the people who are already in that age, they are having health challenges, health issues by the fact that they have aged gracefully bit by bit. And therefore their body requires them to be going to hospital more often. Just like when you buy a car and it is new. When it is new, it doesn't give you mechanical problems. Wait until that car starts getting old. You will forever be at the garage. Maybe after every weekend or almost after every 3 days, there's something you are calling the mechanic saying, oh, there is this, what do I do? So that is also what happens to our physical bodies, that our physical bodies actually, as we age, they also age. And that's why we are talking about aging gracefully with a medical cover. But between age 60 and 75, the premiums will be a little bit pricey. And it's important we be honest in this, but that pricing that we are talking about, I go back to an example. Somebody was asking about a parent who is 90 years. If we would have the opportunity to have a one-on-one, this one with the parent at 90 years, they are doing caregiving. They are now looking for a cover, whether there's something that can be covered for this person at 90 years. And unfortunately, we do not have a cover. But maybe the much amount of money they are using with the patient or with their parent, they could be using a lot of money, close to maybe 300, 400,000, maybe with outpatient. There are situations where they could be having inpatient, maybe NHIF coming to sort a bit, and it doesn't sort 100%. So they're getting into their pockets, doing small fundraising here and there when the person is on inpatient. So in a summary, they could be spending possibly about 1 million. When we are talking about the premiums for the people between age 60 and 75, you find that the premiums could be close to about 200,000. But can I better pay this 200,000 than struggle with the 1 million? And eventually I'll spend that 1 million. It will reach a point I may not have further resources and the person deteriorates and probably they end up passing on. So I will not have offered them longevity in life that I can offer through a medical arena. So you realize that premiums for the people who are a little bit aged, let's be honest, they might be a little bit pricey, but something worth going for, something worth paying, because it is worth saving you the pain of the struggle that we go through caregiving. If you'd want to talk to me further, my number is 0723 786 366, 0723 786 366. Then we can engage more about that medical cover that you actually do require. Thank you.
Thank you so much, Florence, for that. Les says many thanks for the prompt response. Having no more further comments. I'd like to thank you for this insightful presentation once again. And to all members, thank you for joining this informative training. I believe that we are now informed and empowered and ready to be the limitless women that we were meant to be. So again, for those who've gotten Florence's number, please reach out to her. And for those who wanted more information, our team will also be able to reach out to you. This is Lynette, Irene, Lydia, Leah, Delvin, Doris, and Tina. We'll be able to give you a call after this and be able to find out what you need and advise you further. Please note that look out for your emails this evening for the recording of the training and some of the brochures of the products that we have talked about today. And we look forward to engaging with you further. Please note that we usually have these webinars every month. So I will be sending you the invitations. Mark your calendars. Do join and become more informed. Thank you so much. Happy Women's Day and have a blessed day today. Thank you so much. Florence, any last words?
My last word is Happy International Women's Day for all the women that have connected and for the gentlemen who are bold enough to come and join in. She breaks barriers, she builds wealth, the limitless woman. My heart goes out for you and I give you a thumbs up. Thank you.
Thank you so much. Feel free to leave. See you next time. See you in the emails. God bless you.